Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Tuesday to you. Hope you're having a fantastic day. We're going to take another look here at Bitcoin, see what's going on, of course, help us understand best practice, big picture, and what the heck happened yesterday on that fantastic holiday. So nice green day there. Haven't seen that in quite a while. This is that continuation potential here, of course, due to the fact that we have those three white soldiers. Typically leads to a push to the upside, but with a lot of the resistances in place, there's a strong chance we might get rejected here soon. So we're going to basically take a look here today at resistance levels, more specifically what areas we want to focus on for profit taking if you were to have a long position, if the price were to continue higher. Now granted, just because we're having a nice green day yesterday and again today, doesn't mean it's going to continue and we're out of the woods yet. We're still in not so great shape, but it could get better. And we'll look at a couple different scenarios, kind of best and worst case scenario today. That being said, I'm not a financial advisor. I hope you can learn something here today. If you do, comment below, let me know. If not, that's okay too. I totally understand if this isn't your cup of tea. But if you want to become a better trader, this might be the right thing for you because I do have a trading academy, community, and signal group. We're hitting a lot of profit targets recently. My goodness, some really significant triple-digit profit targets here, including a long position we took 20 days ago from Bitcoin that's hitting multiple profit targets as well. So sometimes it pays to kind of just keep your positions open and to effectively have swing trades as well as shorter-term day trades in place. Again, those are all things that are available. CryptoCache.tech is a site, link in the description below. Take a look here, though, at Bitcoin. Obviously, we kind of know the big picture, right? So let's just quickly review that and see. This monthly candle is looking better. Once again, even if it were to close right where it's at, it's still closing below previous support levels based on the monthly. So we do need to understand that this is still a sign of a downtrend. Okay, regardless of how good of a month we have next month, the likelihood of it coming down further from here is still great. And the main reason why I say that is just based on the moving averages. We have a 20-day set moving average working above the price action and the 50 down below. So we kind of got that range between 21,000 and 42,000, okay? Right in that range. So that's essentially where we're at right now on the monthly. We can also see that we are potentially going to close above 50, but it doesn't look like it. And generally speaking, when you see an RSI under 50 on the monthly, when we've had this happen before in the past, it's typically always worked out to actually have a bearish type of situation. So back in 2019, when we had that last dip, that essentially was the case in point where we had the price under 50 for about 6 months. Okay. So just something to kind of be mindful of there, because of the fact that that definitely is a reality, and the fact that this dip that we saw previously, there's a great chance we're going to see something like this again. We're already kind of starting it. So all the more reason to not get incredibly excited about this increase. It's very nice, don't get me wrong. Obviously, some coins, and I think altcoins are not taking off as well as some of them should. But if you have some profits to be taken, definitely do so, just based on the simple fact that we don't know how long this is going to last. So just kind of friendly advice there. We still have bearish qualities in a large time frame. With the weekly, we could see a similar scenario here too, only we got basically a potential bounce off of this 33 on the RSI, close to 30 essentially. And if you look at its history as well, it's really never come below, minus this one instance in 2018 on the RSI. Okay, so generally speaking, if we were to look, all the way back, actually there was one other instance back in 2015, but I don't really think that data is extremely relevant based on market adoption having been so low. But generally speaking, RSI is telling us that the price could very well come back up to test 50. Okay, and if it were to test 50, that'd put us maybe in the 40,000 range. I don't think we're quite there yet, but that's just, again, a potential reality. Taking a look, though, at the moving averages, we can kind of see here that based on where we're at currently with the price action, we're still in this descending trend line. We had 9 weeks of bearish continuation, so it makes sense to have a green day, or a green week for that matter, which is basically only 1 or 2 trading days so far. But what we could very well see is something similar to this, where it has a nice rally up to the previous resistance and gets rejected and comes back down to test 21, 22, 23,000. All right, I still think it's probable we're going to see a price point in the low 20s. It's just how soon will that happen? It'll probably happen after this rally, which we've been expecting this for some time. In fact, I thought it would happen a lot sooner. That's why we opened a long position with Bitcoin 20 days ago, and we're hitting profit targets today, because we really just thought that the price would come back a lot sooner. Wasn't expecting this far of a continuation. But now that it's getting a chance to effectively have built that base, it makes sense that we're going to have a continuation of the upside here soon, with a strong potential for a rejection later. So let's go ahead and take a look at that. First things first, we can clear out this previous Fibonacci, kind of just go ahead and pull up a new one and kind of see where it puts us. And generally speaking here, what we're going to look at, of course, more important is resistance levels. Okay, so where are the key level resistances in the situation here? And really, what can we kind of expect if the price were to continue higher? Well, there's a few different schools of thought, but we can kind of go with the original indicators here, or the original trend lines that I've drawn out from before. In other words, we had a pretty strong support channel right around 37,500. So to me, 37,500 would be the most important thing to break above and close above, preferably on the weekly at least, to ensure that we're back up over that key level resistance. But even leading into that, we're not there yet, of course. We're in the low 32 range. The next key level resistance, based on previous support levels, would be right here at about 34,700. You could round up and say 35,000. And again, that was a previous support level in the past, but also it was a one-day candlestick closed right in this range here. Okay, so there's that as well. And then, of course, the more immediate one is maybe a little less impactful, potentially. Something we want to pay attention to would be right here at about 33,000. Okay, so again, those are some areas that we want to kind of be mindful of, just to understand that, hey, we could and should have some type of slowing once we get to those ranges, or we may even not get to that point. And what I mean by that is just that we had an overextension of the 4-hour yesterday, if I recall correctly, on the RSI, and we're still overextended. So this is usually not a great sign. Anytime in the past we've seen an overextension on the 4-hour, it's come crashing back down. Okay, so again, we got a little overextension here. It went up almost all the way to 85, which we just hit pretty much. And that was right here at our shelf at 48,000. And we saw what happened from there. Not saying we're going to see that exact pattern, but I wouldn't be surprised if we do see further digression based on the simple sentiment that we're overextended on this time frame. Okay, again, there's a handful of situations where you can see the RSI being overextended on the 4-hour leads to a sell-off. Okay, so please understand that right now. It doesn't necessarily mean the price is going to come crashing back down. It could literally go sideways for 2 days and then it comes back down naturally closer to 50 and under 70. That can happen, and that's fine. We want that. That would allow for us to have this continuation pattern. In fact, that's the only reason why we're here right now, is because we had this nice steady consolidation period followed by an increase and potential consolidation. Now, this isn't really all that consolidating, but it is slowly increasing and essentially getting that reset from TD Sequential. So let's go ahead and take a look at that here. In fact, let me just go to remove the fibs here. It's probably a little easier to see. And let's take a look at the TD Sequential and see. Now, according to TD Sequential, we didn't get a full-on reset, so we've been in extreme overtime this entire time. I don't necessarily think that's all that accurate, just based on the fact that we did have a nice consolidation period here. So you could realistically say that the one started here, probably hit about a 9 right there, and we're looking at about, maybe 5 4-hour candles, 20 hours in this continuation. So with that same logic, if you were to kind of consider TD Sequential and hitting a 9 and getting a reset, there's a great chance we'll probably see another 16 hours continuation before we see some type of tapering effect. Now, we could very well see that soon, of course, but I'm interested to see what the trading day gives us here today, at least the close, because a lot of times, again, when you have these type of profits, the whales will suck you in to make you start going long, and then all of a sudden they're going to start just selling like crazy. So do not put that past them. Be prepared and get ready for a sell-off potential. Now, is it going to sell off all the way down and just keep going down? Probably not. It might come down and correct itself right at this previous support range at about 30,500. It's a great chance of that. But between now and then, we need to be kind of cautiously optimistic here, in the sense that we should not be trusting Bitcoin right now and think that we're out of the woods yet. All right. We do have a lot of bullish, shorter time frame indications, right? 3 white soldiers, as I mentioned yesterday, is commonly an increase. It leads to an increase. It kind of tells you that the bottom is in and a rally is about to happen. So that's kind of coming through here. But we need to recognize that at the end of today's trading day, or just say at the end of Friday's trading day, there's a great chance profits will be taken, and it's going to be a potential bloodbath. I just like to make sure you're prepared for that. Again, no guarantees, but what goes up must come down, and this is a lot. I mean, you think about the percentage increase from Bitcoin, from bottom to top, it's 13% in roughly 2.5, 3 trading days. Okay, so again, that's pretty big movement, and we got to recognize and respect the fact that this may be temporary. Okay, if it continues higher, great. 33,000 is our next major resistance. If it continues higher than that, 34,500, and then continue higher from there, 37,500. And I think I misspoke actually. It's more so about 35,000 as a close approximate for that secondary support. So 33, 35, and 37.5. Those are the three we want to kind of pay attention to. Let's take a look at the 1 hour and kind of see what it's telling us. We can see here with the 1 hour, we've got some nice consolidation periods. So we come up to a 9 here, we hit the sideways action. Come right back up to another 9, more sideways action. The one thing I want to urge caution here, though, is that oftentimes when you see 2 9s in a row, it can lead to a reversal. It's just more likely than not, right? So again, reversal doesn't necessarily mean that the whole entire trend is going to come down. This whole momentous push to the upside is done. It just implies that we might see a correction to the next, to at least this area here. So if the price were to come back down, if it comes down to 37,500, that's all well and good. It can likely bounce from there. If we lose 37.5 on the next decrease, if there was one, then at that point we might want to be concerned, because once again, as per usual, previous highs should be effectively the new lows if you are making higher highs and higher lows. All right. So that in that pattern, if we can kind of understand that, we're looking pretty good here in all sense of the word. So again, we're at a 5. We might have 4 more hours continuation to the upside. We're looking fine there. The cloud, of course, we're well and good here too. Just keep in mind, lagging span's coming close to the price action. If and when it does intersect, that's a really good indication of the fact that you might want to get out of your position or sell and take some of your profits. The reason why that's important is because this is a conservative indicator. It's very helpful in helping you understand that you should get in and out before the problem occurs. Now again, there's no guarantees. You could get out and the price could keep going up. But the likelihood of it going up from here is lower because it's losing its momentum. That's essentially what it's telling us. And as soon as this lagging span intersects with the price action, it could happen in 3 hours. It could also happen in 12 to 24. I'd be willing to guess, though, that we're going to see this tested in a potential likelihood of a reversal. And if we lose 30,500, then we probably want to consider this push to the upside finished, if that makes sense, right? It's kind of tentative for the moment. But if we can keep making higher highs and higher lows, our next low is above 30,500. There's a fantastic chance we're going to see 33,000 tested, potentially even 35,000. We may even see 40,000 this month or next. I think that's a low likelihood, but once again, if we can break this trend, this decreasing trend here, I think in general we're going to have we're going to be a lot better shape. Okay, so again, price comes sideways. Just say it comes up here, then we're going to be looking really good, because that bearish continuation would be effectively broken, and at that point we could anticipate the price coming higher, right? Again, we're not there yet, so let's try not to jump the gun and get in a position where we kind of put our foot in our mouth. But for lack of better terms here, there's mostly positive on the short term, which does translate to the long term, the macro, but the macro is still screaming bearish tendencies. Okay, that's just kind of something we got to acknowledge. So again, best and worst case scenario, that's kind of what we're looking at. So I hope that you found benefit and this makes sense how I describe things here, because I know it seems sometimes, in some cases, contradictory. It's like, well, it's going to go this way, it's going to go that way. Really, no one truly knows. But what we see here so far, the short term, the last 3 or 4 trading days do look fairly decent. And if we can continue this push and essentially come down or retest the previous high right here, these previous highs here, then we're going to be in really good shape to be able to see this continuation up. It'd be interesting to see the close here today, though. I wouldn't be surprised if we see some profits taken, but again, that's just kind of par for the course. All right, so just get prepared and ready for that, but try not to go all in on anything that you'd ever do. I mean, you never want to do that regardless, but again, dollar cost average is typically the recommendation. I would honestly wait for DCA at this point, because I do think we're going to see a lower price point inevitably. But between now and then, take some profits, close some of those positions you might have had open for a little while, and try to get some green back in the bag. It's not a very familiar color, and we want to enjoy and celebrate that for the moment. Just don't be naive and try to make sure you protect your investment, because again, this is investing, this is not gambling. A lot of people treat it like that and they get wrecked. So that's half the reason why I built my trading community, and we all learn and grow together. And a lot of folks actually come to our community and actually learn best practice and make sure you get on the right track. So I'm super thankful for all the wonderful feedback I've had recently. Thank you to so many of my community members, and I look forward to continue to help you out. Thanks so much again for your support. We'll look forward to seeing you next video. Have a fantastic rest of your day.